Good morning, good afternoon, good evening, everyone, pertaining the time you are watching this video. Now, on this video, I will be doing the calculation on cash budget. But before we go into the calculation, what is cash budget? What is the meaning of cash budget? Cash budget is the summary of the company's expected cash inflow and outflow over a given period of time. That is the summary of all the expenses the company are expected to incur, and all the revenue they are expected to generate within a given period of time. Because cash budget is always prepared within a given period of time, maybe for a month, for a year quarterly, which is 3 months, every 3 months, for half of a year, which is 6 months, or for a year as a whole. Now we will be going into this calculation. We say Audu Salami Limited is currently preparing its budget for next quarter ending 31st December 2018. The company has the following estimates which were presented to you. We have year 2018, we have 2018, then the last 2 years, which is January. We have from August to December, which is 2018, then we have January and February, which is 2019. Then they gave us the list of the purchase. It's in million. That's why we're having 000 up here. Then they gave us the figure of the sales for each month. Then additional information said, one, sales is 20% cash, while the trade debtors will pay 1 month after sales. That is when the customer bought goods from them, they will be paid out of 100% of the amount of the goods. They will pay 20%. Then the remaining 80% will be paid a month after when they purchase the goods. That is what the number one is saying. Then number two said that salary of 600,000 per month will be paid promptly. That is every month they will pay 600,000 as the salary. Then number two said that purchase is 10% cash, while the suppliers will be paid 2 months after purchase. That is when the company purchase goods from their suppliers, they will pay them 10,000. They will pay them 10% cash. That they will pay 10% from the good that they purchase. They will pay the 10% of that amount. They will pay it instantly. Then the remaining 90% will be paid after 2 months of the purchase. That is if they purchase good in this August, they purchase this 10% of this 25,000. They will pay it in that August. Then the remaining 90% of that 25,000, that will be 2 months after. So that will be in October. And this one too will be in the November. So that is how it goes. Then number three, salary of 600,000 per month will be paid promptly. Yes, they will be paid salary of 600,000 every month. Then number four, miscellaneous expenses of 800,000 per month will be paid promptly. They will pay miscellaneous expenses. The miscellaneous is also regarded as general expenses in some cases. Then number five, it said cash and bank balance at 1st October 2018 will be 200,000. That is the balance. They call it balance brought down for the following month will be the balance brought down for the previous month will be the balance brought forward for the following month. That is all the cash and bank, all the cash in the company, but all the money of the company, both cash in hand and cash at bank, for the previous month will be what they are going to start with in the next month. So they now say required prepare a cash budget on monthly basis and in total for the quarter ending 31st December 2018. Let me start the solving from this. From this, what they mean by quarter ending December 2018. What they ask us to prepare here is to prepare a cash budget for 3 months. Whenever we hear quarter ending of the year, it means 3 months, because there used to be mistake in that place. Because whenever people hear that quarter, they always believe that it's 4. We know that when they say quarter is 4, but when they say quarter ending of a year, that is that is a year divided by 4, which is 12 divided by 4 is giving us 3 months. That makes us that we have 4 quarter in a year, so which is every 3 months. So what they mean by prepare a cash budget for the quarter ending 31st December that 2018, that means they are telling us that we should prepare a cash budget for 3 months, which is from December, November and October. So that's what they ask us to do here. But before we go into that preparation of that cash budget of that cash budget for the 3 months, they gave us the information for the 6 months. They gave us because it's not in this month, it's not all what we purchase that we are going to pay for in that month. There are some of the money that will be going into the next month and so on, and the rest of the month too. Then in the sales too, it's not all the goods that we sold that we collect the money instantly for that month. The trade debtors, they also pay some part of this month in some other months. So that is why the first thing we are going to do here is to prepare how the money coming from sales and how the money goes out for the purchase. That is the first step that we are going to do. After when we do that is we are going to do that for all the months that we're given. After when we do that, then we are now going to prepare the cash budget for the quarter ending that they requested us to prepare, which is for the October, November and December. So the first thing is to prepare the sales, that is total sales for all this month. Then they say that 20% is cash. Then you deduct the 20% from that total sales, which is cash. Then they said the remaining balance will be paid a month after. Then you now pay the remaining balance of that after when you remove the 20% of cash. You put it under the month that they said it's going to pay. So we are going to start the solving right now from here. Now, like I said, the first thing to do, don't forget to write the name Audu Salami Limited. Then first thing you say calculation for sales. Say calculation for sales received from debtors or you can say calculation for sales. Just then you have the list of the months. It's going to be, we are going to start from, we have details. We have here, we can have details, right? We have the list of the months. Let's see. Start from August, September, October, November, December, January, February. Then you can rule it. Not forget that they are in thousands. they are in thousand. Then we have details there. That is the details of all these months. Now the first thing to do after when you prepare your table, don't mind my rub this thing because my board is not, my marker board is not that large enough. So the first thing after when you prepare this table simply means that we prepare all these months here. Then we have to put here also. Okay, so we need it here. So the details, the first thing to do is to put all your sales. We are calculating for sales here. All your sales for each month. For the August is 80,000. For September is 90,000. 90,000. The following we have 70,000. Then we have 95,000. Then we have 62,000. We have 40, 80,000, 60,000, 60,000, then 90,000, then 70,000, 70,000, then 95,000, 95,000, 62,000, then we have 40,000. Then this simply means that sales. This is our sales for the these are budgeted sales for the month. Then for additional information, let us know that sales is 20% cash, while the trade debtor will pay 1 month after. Then from this sales, we say less 20% cash sales. So what we are going to less 20% cash sales. When we less the 20% cash sales, then the remaining 80% is going to be credit sales, right? Then 20% cash sales. 20% of this 800. 20% of this 800 will be 20% of this 80,000 will be 16,000. 16,000. Then 20% of this 60,000 will be 12,000. 20% of this 90,000 will be 18,000. And 20% of this 70,000 will be 14,000. Then 20% of this 95,000 will be 19,000. 20% of this 62,000 will be 12,400. And 20% of this 40,000 will be 8,000. Then the remaining one is credit sales. So we have 16 minus 80,000 will give us 64,000. Then 12 minus 60,000 will give us 48,000. 18 minus 90,000 will give us 72,000. 14 minus 70,000 will give us 56,000. 19 minus 95,000 will give us 76,000. 76,000. Then 12,400 minus 62,000 will give us 49,600. 49,600. Then 8,000 minus 40,000 will give us 32,000. So this is our credit sales. That is what we just do here is that this is our total sales. Then the additional information let us know that 20% of that total sales is going to be cash, while the remaining one will be paid in a month after. So this is the remaining one. When you pay 16%, 20%, which is 16 80,000. 20% of this 80,000 is 60,000. The remaining one is will be cash. It will be credit sales. So here we say credit sales. Then credit cash received from debtors. It will now be, you know that additional information let us know that 20% is cash sales, while the remaining balance will be paid a month after. Now this is 20% which is cash sales. The remaining balance is here. They are the cash minus the total. So these are the one that we paid, that we sold for them on in debtors, that they will be paying a month after. Now which simply means that this one they will not be paying in the month that they bought it. They will be paying it a month after, which is 64,000. This one too, they will pay it a month after, which is 48,000 here. What we are simply doing here is that the remaining balance it will pay a month after. This is the balance of this total here. Will be paid in this month. The balance of this there will be paid in this month. That means they will pay a month after. Then here, this one will pay here. Then 56,000 will be paid here. 76,000 will be paid here. Then 49,000 Sunday will be paid here. So that is the first stage. That is the first stage of solving this. So we are done with the step 1. So we can go to we calculate how the money is going to come in from the sales. This is how the money is going to come in for the sales. Then we are now going to the purchase side. We are going to the purchase side too. Now from the purchase, now say calculation for purchase. Calculation for purchase, right? Now say cash purchase. We want to calculate for purchase now. So and just we are still going to draw the same line where we have details here. Then we have August, we have September, October, November, December, January, and we have February. You have to put this to indicate that the figures that are here, they are in thousands or in millions. So now, from our details, then we put here, we have purchase. Then we put our total purchase, just like the way we did here. Our total purchase for each month. Here we have 25 million, which is 25,000. 25 million. We have 20. We have 30. We have 23. We have 35. We have 21. We have 15. Now this is our total purchase. We go to the additional information again. Purchase is 10% cash, while the suppliers will be paid 2 months after purchase. That is, when we bought the goods from our suppliers, we pay them 10% of that amount of the goods. We pay them instantly. Then the remaining 90% will be paid 2 months after the purchase. That is what it simply means by this additional information. Now, the first thing, just the way we did there, we are going to apportion the 10% of that total purchase to know the remaining balance that is going to be paid 2 months after. Now, You say cash purchase, right? Less 10% of cash purchase. Less 10% of cash purchase. Less 10% of cash purchase. So 10% of this 25,000 is going to be how much? It's going to be 2,005. It's going to be 2,000. It's going to be 3,000. It's going to be 2,300. It's going to be 3,500. It's going to be 2,100. It's going to be 1,500. When you want to do this kind of thing, when you say less 10%, you don't need to bother, you don't need to disturb yourself. Just know that when you want to less 10% from this one, just remove 110. The 10. So when this one is 30,000, it's going to be 3,000. Remove 10. When it's 23,000, it's going to be 2,300. So it's very simple like that. So when we remove the less 10% from this, so this is the 10% that we pay instantly, that we pay in that same month. Then the remaining balance say it will be paid 2 months after. So now before we pay it, we have to know how much is the remaining balance that will be paid 2 months after. So here we remove this from this. So it's now going to be credit purchase. Credit purchase. That is this one minus this one is going to be our credit purchase. We have 22,500. We have 18,000. We have 27,000. We have 21,700. 21,700. We have 21,700. 18,000. Here is 27,000. 27,000. Then we have 21,700. And we have 31. 22,500, 18,000, 27,000, 21,700. 21,700. Then we have 31. Then we have 31,500. And we have August, 25, 25, 18,000, 27, 21, okay. 27, we have 27, we have 21, 700, we have 31, 500, then we have 18, 700, then we have 13,500. So that means when we remove the 10% of the cash purchase, that the 10% of the money, we pay 10% of the money for them instantly. So this remaining one is credit purchase, and that credit purchase said is going to be paid for our. It will be paid 2 months after purchase. That is, this amount that remains will be paid 2 months after purchase. So the first month we are not going to pay that remaining balance. Second month we are not going to pay it until 2 months after, which is this one will be paid 2 months after here, which is 22,500. This one will be paid 2 months after, which is 18,000. This one will be paid 2 months after, which is 27,000. Then 21,700. Then this one 31,500. So with this, so this our this cash paid to trade creditors. That is, this this is the cash that we pay to trade creditors. That is our supplier that credit us the goods. So this is the cash that we pay for them. So this is the first step. That is the first step that we are going to estimate, calculate the summary of how the purchase is being made and how the sales is being made. So this is just the first step. After this one, our next step is now going to be based on what we have to calculate, which is for the quarter ending, which is for the December, November and October, using this information. So what we are going to calculate for those one now is that we are calculating for these 3 months. For these 3 months. So it's only all the information that are here that we are going to use. These are the information that we need. It's because of this information that we have to do all this one. And we have to do it because you know that some of the money that's supposed to be paying in some month of year will enter here, and the same thing, some of the money that's supposed to pay here enter here, but we want to estimate, we want to calculate. Yeah, this is the final solution. That is where we are going to calculate for the 3 months that were given to us to calculate. So from this question that we asked us to do, they asked us to prepare a cash budget on monthly basis and in total for the quarter ending 31st December 2018. So we said calculation for cash budget for the quarter ending December 31st 2018. And like I said before, when they say quarter ending, that means the last 3 months of the year, which is October, November and December. So then they say we calculate in total too. So here we have October, November and December. Then we have total. Then we should not forget that we have 000 here, 000 here, then here we have under details here. Let's say we have details here. So here we have cash receipts. Cash receipts. Or we call it cash receipt, or we say, let's say better still, we say income receipts. In some other aspect they call it just income. So what we are going to be doing here is that we are going to calculate all the income for these 3 months. Then we are going to calculate all the expenses for or payments for these 3 months also. Then we are now going to minus the income minus the expenses to get our net cash flow. Then we now add our balance brought forward with our cash flow. We now be our balance brought down for that month. Then our balance brought down for this October will be our balance brought forward for this November. That is all the net cash flow for this November will be added to the balance brought forward, which is balance brought down for this month. Will be come here, we add it together with the net cash flow. It will be the balance brought down for this month also, and it will now be the balance brought forward for this month also. So we are going to calculation now from the income. From our income, we have cash sales. Yes, normally there used to be this type of question. There are some questions that it won't be only our income will not be only from the sales of the goods. Sometimes they might say one of the property that have been depreciated. When they say they sold social property, and like mostly they say that like they can just put it that they sold a motor vehicle for so amount in May, but the money was paid in July or in October. For example, they sold this vehicle in May, but the money for that vehicle they sold was paid in October. So where are we going to put the money here? It's not going to put, we are not going to put the money under, the money will be under income received, right? But it's not going to be under the month that was sold. It's going to be under the month that the money was paid. There are so many examples like that. But here it's only our income receipt here only came from the, it's only coming from the sales. So we don't have any other additional information that are pertaining income. So most of them are expenses. So since our only income comes from sales, now we are going to say that cash sales, the first thing is cash sales. From the previous calculation that we did, where we've done the cash sales for each month and the credit sales, that is the money received from the credit sales and how they received in each month. So we are not, when we say cash sales, we are just going to the cash sales under these 3 months. The cash sales under these 3 months, we are going there and put it direct. So what is the cash sales under these 3 months? We have 18, 14 and 19. We have 18,000, we have 14,000 and 19,000. Then when we add these 3, we are going to get 51,000. Normally I'm just calling them thousand because they are in millions, because when we add these 3 zeros to all these, they will be millions. But since we have these 3 0 at the top, so they are covered. So after the cash sales, what is the next thing? We said cash received from debtors. You know, this is the cash sales for these 3 months. That is the money we collected immediately, or the money we are going to collect immediately. We give the good for the buyers. The money, the cash we are going to receive immediately. So the remaining balance from this one is going to be cash received from debtors. From debtors, and we are going to go through all the cash received from them. That is from here they say that the debtor will pay 1 month after. So that means the remaining balance of the good that they bought in, let's say October, we have October. In September, the main balance of the good they bought in September is what is going to be here, because they pay 1 month after and so on. So what we are going to do here is that just go to that our previous calculation, just go to pay the value under the cash received from debtors. That is credit sales. Credit sales. We have credit sales. Then after credit sales, we have. After credit sales, we have cash from trade debtors. Cash from trade debtors. So it's what is under, what the figure that is under these 3 months is what we are going to put here. So when we check the figure that here, it should be 48,000, 72,000, 56,000, 48,000, 72,000, 72,000, then we have 56,000. Then when we add the 3, it's going to give us 176,000. 176,000. Going to give us 176,000, and since there is no any other from the additional information, there is no any other thing that we can generate money from. So from here we can get our total cash inflow. So here will now be our total cash inflow. That is all the money that enters into the account for these 3 months. Total total cash inflow. So when we add these two together, it's going to give us what? Add the two together, it's going to give us 66,000. We add the two together, it's going to give us 86,000. When we add the two together, it's going to give us 75,000. Then when we add everything together here, it's going to give us, or everything together here is going to give us 22. 227,000. So you can regard this one as A. So this is our total cash flow, total cash inflow. That is all the money that enters into the company within these 3 months, for each of these 3 months. And we have the total here. Now after this one, we are going to expenses. They call it expenses, and you can call it payments. You know, this income, then payments. And now say payments. Payments. You can still maintain the payments. Now it's still October, November, December. Yeah, we have total here. Now under payments, that is the money that we pay. So let's start from, normally in so many cases you can just start from how the money goes, how you paid for the goods that you purchased, right? But let's start from the additional information. Any from this additional information, anywhere we see payments, anywhere we see that they pay is also this thing, we are going to put it. Now from this number 3, this one is order is purchase, right? From this number, the salary of 600,000 paid will be paid monthly. Per month will be paid promptly. So that means we have salary, like 600,000. We have 0 there. The unit will be 118. 18,000, like 18 million. Then what else do we have after the salary? After the salary, what else do we have? Miscellaneous expenses. We have miscellaneous expenses, which is 800,000 per month. That is every month of everywhere they pay 600,000, and the same thing as salary. So I just need to put it. How much? 800,000. 800,000, which is going to be 24,004. Then there's no more any additional information that is about income. Then we now go to how we paid for the goods that we purchased. Then now we have cash purchase. That is the amount that we pay cash purchase. that is the amount that we pay instantly when we purchase the good. So we go to that our previous for a calculation. So what is our cash purchase there? Our or you say cash purchase or cash payment. You can call it cash purchase or cash payment, or they are still the same thing. So when we go to that place, our cash payment or cash purchase is 3,000. Then we have 2,300. We have 3,500. Then when we add everything, we have 8,800. Then our credit purchase. Our credit purchase, or we call it our credit purchase, or we call it cash pay to credit purchase. Card or okay, the best way we put it to make it more likely is that, let's say, cash pay to trade creditors. That is the money we pay to our trade creditors, that the money we pay to our supplier that sold for us on credit. So we said cash pay to trade creditors. Cash pay to trade creditors. Normally, if you put credit purchase, still mean the same thing. I just do it in this way, just like to make it understandable more. That's why I just put it like cash pay to trade creditor. That is the money, the remaining balance of this one that we pay 2 months after them in our previous calculation. So here we are just going to go here for that previous calculation. That is when we have cash pay to trade creditors. So any figure you find under each of this month is what we are going to use. Then under this month we have what? We have 22,500. We have 18,000. We have 27,000. Then the total will be 67,500. So this is our. There is no any other. Since there is no any other things to pay for, there is no any other payment that we made. So this is going to be our total cash outflow. So when we add everything together, it will be our total cash outflow. That is all the money that goes out of the company within these 3 months. That is what they call total cash outflow. So likewise say that all the money that comes in to the company within these 3 months is what they call total cash inflow. Now to get our net cash flow, that is our income minus expenses, you now give us the net cash flow. So here let's derive our total cash outflow. So when we add everything here, we are going to get 26,900. We have 26,900. That is when we add all this one. Then here too, when we add everything, we have 21,700. 21,700. Then when we add all these three too, we have 31,900. 31,900. Then when we add all the totals too, we are going to get 80,500. 80,500. So this is our total cash outflow. Now to get our net cash flow, that is when we minus our income minus expenses, then the net cash flow will be like profit. You can call it something like profit. That is, we minus our income minus expenses. So the remaining one is you can call it profit. So when we minus it, that is A minus B, which is net cash flow. So this one minus this one will give us 39,100. 39,100. This one minus this one will give us 64,300. 64,300. This one minus this one will give us 45,100. 45,100. 45,100. No, this one 75 minus 31 should be 43,100. 43,100. Then the total two will give us. This minus this. It was 146,500. 146,500. So this is our net cash flow for each month. After when we deduct the payment from the receipt, this is what remains for each month and for the total. So after this one, so what will now be our balance brought forward, our balance brought down. And we know that balance brought down for this month will be the balance brought forward for this month. That is what this month, the total amount that this month end with will be the total amount that this month will start with. That's what they mean by balance brought down and balance brought forward. And from the information, they let us know that cash and bank balance at 1st October 2018 will be 200,000. That is what the media is that the cash, the balance brought forward, the balance that the October starts with is 200,000, which is not include all the calculations that we've made here. So what will be the balance brought down for this October now will now be the net cash flow for that October plus that the money they have initially before the operation for that month starts. We now add everything together with the balance they started with, which is 200,000. When we add it to the net cash flow, we're now going to give us the balance brought down for the October, which is going to be the balance brought forward for this November. That is all the total amount that this October end with is going to be the total amount that this November will start with. So the same thing when we now calculate all these things for the November, then we get the cash flow for this November, and we now add the money that they started with to it. Will now be the, before we get their own balance brought down also, and their balance brought down also will now be the balance brought forward for this month also. So what I'm explaining since is that this is the net cash flow for this October month, and they let us know that they started with 200,000. So we are going to add that 200,000 to here, 200,000 to here, then we get so this column can see, you can say balance brought down versus yes balance brought down. That is the, okay, let me say balance brought forward. Balance brought forward. Then here will be balance brought down. That is what I mean by this column is that the amount that is here that will be under all this is balance brought forward, that is the money they started with. Then here will now be our balance brought down, the money that they end the month with. Now when we add these two, this is the net cash flow for this month plus their balance brought forward, that is the money they started with. So when we add the two together, we are going to get 39,300. That is this 200,000 plus 39,000. So we are going to get it's a million. It means 39,300,000. So this balance brought down for this month will now be balance brought forward for the following month. Like I said, now this 39,300 will now come here. That is this is the total amount that this October end with, and it's going to be the total amount that this November will start with. So when we now calculate the net cash flow for this November, we are going to add the balance brought forward of the previous month to it to get its own balance brought down also. So this one is going to be 39,300 is with balance brought forward. That is what the November start with. So when we add it to their own net cash flow too, we are going to get 103,600. 103,600. Now this 103,600 is what the total amount that the November end with, and it's going to be the total amount that the December will start with. So our balance brought forward for this December also will be 103,600. When we add it to the next net cash flow of the December also, we will be getting 146,700. 146,700. So this is the total amount that the December will start with. So what will now be our total? What will be our total for 3 months? That is the money we will be having in the bank and cash for the 3 months. Which will be total. It's not going to be total of everything here again, because we cannot have more than all this one. This now will now be the balance brought forward for the previous month, which is going to be total. So this same figure will now be here. So which is balance brought forward for this. It will not be balance brought forward. This is what December end with, and it's not going to be what the following month we start with. So this is everything about the cash budget. It's not more than this, and it's a suitable topic. I will find time. I will look for a question that is a little bit tougher than this one, where we'll be having some bulky additional information to widen our knowledge, our understanding on this particular topic. Thanks so much for watching this video, and please don't forget to subscribe to my channel, in which we'll be updating anytime I drop a new video. And please like and share and comment on it. And if there's any information or any other question pertaining to this that you would like us to get to put a more light on it, you can reach me on my WhatsApp, which is 08164031819. And if you want to be of assist, if you can, I would like to make it more elaborate than this, that is to make it more clear and all this. So if you want to be of help, it should be well appreciated. Thank you so much. God bless.